So guys, welcome back to my channel. This is Matrixfx, and like I said, I am reviewing currency pairs for you guys. So you guys must have watched like the last two videos. So I think without further ado, let's just hop into the video. If you're enjoying the content so far, do well to like and subscribe to get more of the same and to be notified whenever I drop a new video. Because what I'm giving here, guys, is premium knowledge. It's premium knowledge, guys. You can't get it elsewhere. It's premium knowledge. So let's just go into it, guys. Don't want this video to be too long. Now, those of you who used to watch my videos and you don't watch it complete, and then you come and chat me up on Twitter telling me shit, I don't think I can condone such a thing again. Please, if you are watching my video, watch it to the end so that you hear everything I say. Don't come and take two parts from the strategy and say, okay, these two parts didn't work. This. You have to know the whole part. It's like a machine. Everything works with each other for it to function properly. So you have to watch the video to the end to know what I am talking about with examples that I use for you to be able to execute it properly. Not that you see where I talk about top-down analysis, liquidity, and then you jump to number 6, and then you now be like, the strategy doesn't work. No. You have to watch the whole thing, go through the whole thing, so that you know the do's and don'ts of the strategy. So, let's continue, guys. Now, I think first we have to go for the weekly. Now, the weekly in this situation still didn't give us like much information like that, only for us to notice this other block that was clearly traded to the previous week. I think the last 2 weeks, so the market traded to this previous other block. Now in the daily, should we mark that out so that you guys can see it? So look at it. Now in the daily, this is the other block right here. The market traded to it the previous. I think let me clear this. You guys to be able to see. Okay, I think that's enough. That's like it's clear enough. So the market traded to it this previous day, and this particular candle here, this particular region, it's like an area of resistance. So when the market went into it, it rallied. But we're not talking about the previous week, guys. We're talking about this current week. So let's continue with our topic before we deviate. Now remember the transition of time frame. Weekly, daily, and now I'm in the 1 hour. Now in the 1 hour chart, remember this is the start of the week and this is the end of the week. This is my open, my weekly open. I do draw it to the end of the week. That's when it begins to end to know. Now from the higher time frame, you guys can already tell that this is our objective and we are still bullish on this pair. I think this is Gbpjpy yen. Now knowing that we are bullish, you can see the market traded below this. I think let's go to the lower time frame. My be all and all time frame, that is my be all and all time frame. My time frame that I use for almost everything is my 5 minutes and my 15 minutes, because I already know where I am. I have book with me here. In that book I already write, okay, I saw this in the higher time frame, I saw this in the weekly, I saw this in the daily, I saw this in the 1 hour. So I'm looking at these levels, this level in my 15 and 5 minutes. So I don't have to be going back to those time frames. I have everything in my book right here. So you can clearly see during the Asian session, the market traded to this right here. Swap that, just a quick sweep. Now after sweeping that, the market starts to move higher. Now coming to this chart in the morning, I won't lie to you. If you notice, the market actually followed our trading strategy here. After sweeping that liquidity, came, broke the structure. If we flip the leg, right here and go to a 5 minutes. So if we flip the leg right here and go to a 5 minutes, we can see this fair value gap the market didn't trade to that. You see that we won't have even catch any trade. But I think in the 15 minutes you'd have noticed that we had a fair value gap there that we can enter off of this fair value gap, which is clearly below the 50%. Let me highlight it for you guys. This fair value gap right here, which is clearly below the 50%. This is the 50% line. It's clearly below it. Would have entered off of that fair value gap. But sincerely for me, I won't take this trade. My reason being that I like taking trades that formed during the New York session. So had it been this particular area formed somewhere around this level, that is around in the New London session, in the London session, I would have taken it. But since it formed in the Asian session, most times the market normally does clear the Asian low liquidity. The market might just come back and sweep this before giving us what we want and continue higher. I think I'm a very bad drawer, so that's why I wouldn't have taken it. But for somebody who did, it would have been massive profit. But we are doing this for the average Joe, something that the average Joe who is working a 9 to 5 can actually do and enjoy without stressing himself. The rest of trading doesn't have to be stressful. You are just the person making it stressful for yourself. Trading in general, it doesn't have to be stressful. So let's assume you caught this, lucky you. If you didn't, no problem. For those who caught it, I think this would have been like a 1:2, like 1:9. But our target is an obvious liquidity, which is the Asian high, and you'd have gotten a 1:5. I think that is also good. The way we have Instagram traders, flaunting money up and down without them actually taking trades and making actually like real money from trading. You just see them doing weird shit with Lamborghinis and stuff. So back to the topic. Now let's say you didn't catch that trade. Now notice what is going on. And towards the London close kill zone and the New York open, look at what the market is doing. Now while the market is trading, we'll be taking note of swing points. This was supposed to be, for those of you who watched the previous video, maybe you might have taken trades here, you'd have get stopped out, because this is not a break of structure. This is actually like a sweep of liquidity to just go back higher. This is like, that the algorithm work with seconds. That's what Michael taught us, so that the algorithm works with seconds. So for somebody who is using an algo to trade, he might actually catch this trade, sell it, buy it here, sell it here. So it depends. But since we are humans, we can't be doing that. So even if we can, it's like waste of energy to us. So all we have to do is wait. Now look at what the market did. The market swept this just in the New York open, swept that. Now you have noticed that this is the leg that did that. I think it was from here to here. So after the sweep, we got this break of structure with the body. All we have to do, fib. You can see. Now if you go to a lower time frame, you have seen the fair value gap clearly. But since we don't want this video to be too long, you guys can just do it in your charts. So but for this video, I'll be going to the lower time frame. And even if I would have been going to the lower time frame, you can see this right here, this week of this breaker block. This is a breaker. You can see broke structure before the break of structure down. So this week right here for the breaker block, if you were to take it, I think if you were to fib it again, you'd have noticed that above the 50%. So you can simply just take that level, and it would have been a very, very beautiful and sniper entry. Now you can see this is actually the sweep technique. So just throwing that in there, that's the sweep technique. For those of you who don't know what the sweep technique is, please go and watch my video, go and watch the series so that you know what we're talking about here. So our 1:3, like I said, depending on your trade management strategy and everything, this might have been a win for you, it might have been a break even, it might even be a loss for you, depending on how you manage your trades. But for somebody like me, sincerely, I don't know, it might be like break even. The reason being that we have already reached like 75, I think we have reached up to 75% of the move. Yeah, it almost got to our TP, but it failed, depending. I think for me it would have been like a break even, because I might have taken something off of the trade when it got to the 50% or the 75%. Might have taken something off, but it wouldn't be that like much. Maybe like 10%, 20%, 30%. So depending. So when the market did this, let's assume the market took you out and it was a break even. Now, one thing, guys, you guys need to learn like how to study the charts whenever you take a loss. When you take a loss in that scenario, you just come back and notice that okay, the market did actually give you a sign that I wanted to reverse. It came back filling this fair value and reversed. So it's actually a continuation of the bullish move. It was actually a continuation of the bullish move. Now, for somebody who is like, should I say, kind of experienced, although obviously I'm not, let it not be as if I am. No, I'm not actually that experienced. So I'm still, I think this is like my first year. If I'm not mistaken, this is like, it's after like within these last 3 months, that's why I got to understand the strategy very, very well. So I won't really count it as my first year. I'll say this is like my first 3 months of really understanding the strategy and implementing my own, the one that suits my personality. So, but if it was somebody, let's say you're already good at it, and you only trade with your bias, this would have been like a 5%. This would have been somewhere around a 3%. That would be like an 8% a day. And let's say you cut this, and you cut this. I think that would be like mad tens. So I think in a journey we are all together. Nobody is like that much of a perfect trader. I don't believe even ICT uses stop loss because he knows that he's not invincible in the market. So nobody's invincible, guys. So you guys have to just work with me here. So let's assume you can see that when you are backlogging data, I think I'll do a video on how to record backlogs. So you can see 1, 2, 3. You have write it down in your trading journals so that you'll be able to reflect to it later and see what is going on. And with I think enough data, you'll be able to know, okay, maybe this is working. I think that's how ICT formed even the other block that we are using today. He might have been noticing it, and maybe after collecting like hundreds of data, he now says, okay, whenever the market does this, the market reacts in this level, the market does this, the market reacts. So, and maybe that's how the other block came to life. I am assuming, guys, maybe that's how. So I don't know. But let's just continue with our video. So you can see the market traded the next day, traded. Remember, we are bullish. So if you are very conversant with ICT, you know that whenever you are bullish, you want to see the market retrace, and sweep a kind of liquidity the other direction for you to buy. So you want to be like buying at discounted price. I don't know how to explain that for you guys. But what it simply means that you want to see the market pull back. So in a buying situation, you want to be buying from pullbacks. That's why whenever you notice, like if I have a bias, I want the market to move counter bias to sweep the liquidity that is counter bias. In this case, the Asian low. After sweeping the Asian low, that's when I'll be looking for buys to take out the Asian highs. I probably ride the trade higher. So let's continue. I think this is the same thing. That's what happened here. For some of you who are saying this, I know that you'll be like, is it trading channels now or something? No. So if you notice this, the market, when the market did this sweep, it didn't break structure, then it came back down. This is the field technique right here. You can see it. The market is doing some kind of move that we don't understand. We just wanted to break this swing point and it didn't. But instead, it came back, formed our new structure right there. I think let me quickly go to the 3 minutes to show you guys. Yeah. If you go to the 1 minute, it will be very clear. So I think that I'll just leave that for you to do. I'm not really good at drawing all this trend line shit. So what it simply means is you can see that the market did that. It didn't break the structure yet and it pulled kind of sweeping the liquidity that's resting here, the trend line liquidity that will be here. So sincerely, I don't know how trend line traders do their thing. I just got the liquidity idea from when I was trading SMC. That's where I got the liquidity idea from. So I don't really base on the liquidity idea because obviously, what am I using it for? The SMC is not far off different from this particular strategy. Now, after the market did that, you should go to your lower time frame. You see this, then this break right here. In our 1 minute, there is a fair value gap. I won't be going to the 1 minute. You can do that at your free time. So in our 1 minute, we have a fair value gap there. The market trades back into that fair value gap. My stop loss is obviously just at this other block. You can see this other block right here. That's where my stop loss is. Reason being that the fair value gap, the last fair value gap that is here, that have already been filled, and this fair value gap is already high resistance. So I think the market won't be even, I think it won't even be capable of going there. But if it does, we are protected. So 1:3. Yeah. 1:3. And as you can see, our 1:3 got filled the next day. Now, if you are somebody who can hold trade, probably you catch this move. For somebody like me, I won't lie to you guys, I can't. I might close the trade around here, even after the whole profit. It might come back here, and that's when I see it, and I'll close the trade. I can't hold trade. I'm still working on it. I'm working on myself, but currently that's the kind of trader I am. I don't hold trades for long. So if you were to hold it till the next day, you can see that 1:6. Even with this big of a stop loss, you're still getting 1:6. I think that's like, it's fair enough to classify the strategy as good. So I think this is the objective. This is the objective. This line here is the objective. I think, let me quickly go to that time frame. You can see it's objective. Now we failed that objective just by very little. I think by how many pips? Let's just go in and measure that, guys. By how many pips? Okay, you can see by less than 10 pips. So we failed that. After failing, we want to be seeing what the market will do. This is our sweep right here. This is our sweep. Then our break of structure. Our break of structure, if you flip that, the break of structure was done with the body, guys, so it is not here to here. Don't use that. It's actually here to here because it is done with the body. So these are 50%. Fair value gap above it, that's unfilled. I think from here to here. Let me quickly mark that out for you guys. This is the fair value gap that's unfilled. You can go and check it in your own trading view. This is the fair value gap right there. It was unfilled, so we just went to fill it. So if you go to lower time frame, you see a kind of structure here. So this is like a breaker in a way. So taking that from here, keeping your stop loss here just to be protected, and you have gotten your 1:3 also. Now trading this bar, I would advise you to keep your take profits just around here. So it will be like the market, your target is this fair value gap. The target is this fair value gap right here. Because you don't know what the market will do. The market might just come back and fill it and continue going higher. Now you can see the next day the market really didn't give anything. So it was really choppy and sloppy. So then this is the current day we are in. But for this, I think you guys should just go through this chart. You know that it is sloppy and choppy. It didn't really give any move. So you are not even advised to, when the market is doing something like, you are not even advised to be in the market. The market formed another one right here. Right here. Market formed another setup right here. After taking that, give us this. This survival gap obviously is below the 50%. I don't even need to flip that to know that it's below the 50%. But just to fulfill all righteousness, let's flip it and see. And you can see below the 50%. So, and if you had taken that, you would have been in profit 1:3. Yep, 1:3. And wow, even after it being a choppy day, the market still give us a nice setup. But sincerely, I don't think I would have taken that, because the price action is not really convincing. It's not really okay for me. Seeing it now, it's not okay. But I don't know, maybe if I was live in the market then, I would have taken it. But I hope I do. So that will be all for this, guys. Thank you for watching. Make sure you watch the video to the ending. Make sure you go and follow it. Don't put it in 2x and allow it to run. Make sure you follow it so that you understand the concept. The more you are seeing it, the more your brain will be capturing it. So the more you'll be able to see it, even with the fractal nature of price, you still be able to see it. So thank you. That will be all for this video. Thank you for watching. Make sure you leave a like and subscribe. And in the comment section, tell me the videos you want to be seeing in this channel. I want you, the audience, to tell me the videos you want to be seeing in this channel. So that will be all, guys. Thank you and have a blessed week.